Welcome to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping today's show on April 29th, 2016. Our time is 8:44 Mountain. Our radio show runs on 630 CHED in Edmonton, Sunday afternoon at 3. We have a podcast through iTunes. Type in the World Financial Report on Radio. You'll find us there. We're also on YouTube and tune in. And I have to tell you that we're totally covering you when it comes to missing a show. If you ever do, go to Harold's two websites, HESradio.com, rarecoloreddiamonds.com. The shows are archived there, streaming 24/7. You will never miss us. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022, our featured diamond of the week. And we had a beauty last week. It was a heart-shaped purple pink diamond, just gorgeous. And this week we followed up with another beautiful, beautiful diamond. It is a .44 carat oval cut, fancy, vivid, purplish pink argyle. We'll talk more about diamonds later in the show, and we have a very interesting quote that we want to talk about because it really summarizes why you want to be in the hard asset market, and that includes diamonds. Featured diamond of the week, rarecoloreddiamonds.com, .44 carat oval cut, fancy, vivid, purplish pink argyle. Go to rarecoloreddiamonds.com, featured diamond of the week. As we start today's show, the Canadian dollar is close to 80 cents. Right now, as we tape, it's at 79.86. For the month, it's up 4%. From the lows, 16.6%. The forecast for the Canadian dollar for 2016 for the rest of the year, right around 75 cents. The U.S. dollar spot index is the lowest since August of 2015, and a lot of it has to do with a very dovish Federal Reserve. They came out and kept interest rates where they are, although it does look, when you take a look at some of the indications they gave, that June could be the magical time that they raise rates in the United States. And Harold, in the short term, we are seeing moves in metals, we're seeing moves in oil as a result of the U.S. dollar and the dovish Fed. But I know it's your belief that probably people should be looking to take profits and not be jumping in at these levels, because once the Fed raises rates, we could see a major pullback.
And you will see a major pullback, and that raise in rates, if it does come in June, will be enough to send the U.S. dollar back up over par, which I believe it's going to go to. So this is a mini bull market in gold, but the thing is that when gold hit $1,050, there was no reason to buy gold at that point, except for bargain hunters coming in and just trying to buy some cheap gold. But the fact is that all the fundamentals and the technicals for the market were for the market to go lower. So you've got speculators in the market now, speculators that trade the futures in the options market in gold and in other commodities, and I'll talk about that because it's important that we understand that there's a difference between short-term and long-term and catching a trend, which a trend can be your friend, but a trend can certainly go against you also. So gold has rallied this year from a low of 1,050 to a high that we have right now of 1286. So basically, we've seen a huge increase in the price of gold with absolutely no fundamental reason aside that the fact that the U.S. dollar has fallen off. So there's the direct correlation and the relationship between gold and the U.S. dollar. When the U.S. dollar weakens, gold goes higher. The U.S. dollar got all the way down to 72.5 cents back in 2011, and the price of gold went to $1,900. So there's the relationship between gold and the U.S. dollar. So when gold rallied to almost $1,300, the only reason that it's done that is that the U.S. dollar has fallen off. And basically, I believe that that move is almost over. So if there's anybody out there that's listening to our show that has been long gold in the futures market, options market, anything like that, I think we're getting ready to see this market start to back off, and you may want to take your profits. You see, the thing is that when people that are active traders are looking at markets like gold and silver and oil and currencies and that type of thing, and you see a market like gold go up $200 or $300, you feel that you're missing the move, and it causes, believe me, it causes aggravation type of thing, because you should be in it, or you thought that you should be in it, and that's when people start to buy into the story and they start to buy the market at the highs. That's when we have always said that the general public always buys at the wrong time. They buy when the stock market is at its highs, they buy when the metals markets or the commodity markets are at their highs, and that's the wrong thing to do if you're looking to make money in the market, obviously. So what I tend to do when I'm analyzing a market, I look at vital information like who's long the market and who's short the market, who's in the market at this point. I don't put a lot of credence on speculators, because speculators that trade in the futures market are 90% wrong. In fact, that's a true statement, that 90% of the people that trade the futures market lose their money. So obviously, if you don't know what you're doing, the chances are is that you're entering the market in a leveraged market that is extremely heavily leveraged, and where 90% of the people lose their money, the odds are not in your favor to do well. But then again, when you look at what the major banks that are trading these markets are doing, that's going to give you a different outlook, because banks like JP Morgan and Deutsche Bank and all these banks like Goldman Sachs that have been trading in the gold and silver market, that's who I follow. And they're the ones that really control the market. So here's what's going on at this point. You've got a nice rally going on in gold. It's a baby bull market. It's basically coming to its end. There's 291,000 long speculators that have been betting that gold's going to be going up, and there's 74,000 speculators or contracts of 100-ounce contracts in gold that are shorting the market. So the speculators have been heavily long, and now there's about 74,000 contracts short that believe that the market's going to start to go down. But what we look at is what the major banks are doing, because the major banks have trading desks. They trade in the commodity markets, and they trade for themselves, and when they're trading their own and their clients' money, again, they can manipulate these markets like you've never seen before. And over the past 15, 16 years that we've been in this market in gold with you, we've looked at the commercials and seen what they're doing in order to determine the shorter term moves in the market. And as of today, we're looking at 117,000 contracts in gold long. That means that there's 117,000 contracts saying that the market's going higher, but 357,000 contracts saying that the market's going short. So who would you believe at this point here? The speculators that are saying that the market's going to continue to go higher for basically no reason, except that the U.S. dollar has taken some profits and has fallen back off, or are you going to believe the commercials that are right 90% of the time and are short 357,000 contracts? If I was putting up my money, and I do have my own money in these markets, I'm short the market as of this point. I believe that in June we're going to see a increase or a raise in interest rates in the United States by the Fed. And one of the reasons that the U.S. dollar has fallen down at this point is that for the last 2 months, the Fed has not raised interest rates like they said that they were going to do. But every indication is that in June, we're going to see them raise interest rates. Rising interest rates are bad for gold. Gold will fall off substantially and the U.S. dollar will rally. So that's still the play. I'd be buying the U.S. dollar and I'd be shorting gold in and around these areas. We're still trading in a range in gold, so I do believe that that market is going to fall back. Similar situation in silver. Right now, there's 94,000 contracts long or 95,000 contracts long of speculators in the futures market. There's 23,500 contracts short. But again, what the speculators do really is of no interest to us. They're wrong 90% of the time. What you want to look at is the commercials. There's 53,000 or 54,000 contracts long, but there's 138,000 contracts short, and that's where I'm putting my money. And then when you look at the U.S. dollar, there is 42,000 contracts long by speculators, 28,000 short by speculators. Again, put that aside because they really don't know a lot what they're doing. And then look at what the commercials are doing. There's 10,000 contracts long in the U.S. dollar, but there's 30,000 contracts short, 3 times as many short by the banks. I think the banks know a lot better what's happening in the markets than the speculators do. So again, we're nearing close to a top in the gold market. I would not be adding any positions or not going long the gold market at this particular point. Again, there's no fundamental or technical reason to do that at this point. In actual fact, if we think that we're going to see a rise in interest rates, one of the best trades on the board would be to short gold when that report comes out or a couple days before. And for those that want to do that, contact me and I'll show you not only how to trade futures, but how to trade options. I won't make the trades for you, but I will certainly help you with those trades if you want to. Along with that, for those that would like to see the copy of the Commitment of Traders reports that I'm looking at this point, you definitely want to give me a call and I'll help you with that. You know, what's happening in the marketplace right now is crazy. Nobody can really figure out what's going on because there's so much going on in the markets that don't make a lot of sense. That's why I've always said, stay out of trading futures and options if you don't know what you're doing, because with the heavily leveraged markets, they could definitely go against you. If we think that the Canadian dollar has topped out at this point, then we need to look that the Canadian dollar is going to come down, and one of the reasons the Canadian dollar is going to come down is because of the price of oil. Again, there is no fundamental reason in the market right now why oil should be going up, except that it was so cheap at $28, $29 that you have speculators bidding up the market. But the commercials are heavily short oil. And again, I'm putting my money on what the commercials are saying much more than the speculators. So at this particular point, we think that we're getting close to the end of the bull market in the Canadian dollar, in the oil market, and in the gold market, and we feel that the commercials are going to push these markets down, and you don't want to be leveraged if that's going to happen. So again, for those that are interested in what I'm talking about and want to know more about the Commitment of Traders reports, how to read them, how to understand them, it's my pleasure to help you. I'll spend as much time with you as you need in order for you to understand what's happening in the market and how it could best affect you. And then there's other reports going on of what's happening in gold and those type of things, and I'll send all these reports to you if you're interested in finding out how to further trade these markets or to understand when to go long or short or just simply when to buy gold. Now, I'm very heavily invested in physical gold and silver. I own over 2,000 ounces of physical gold that I have never sold off. I'm a firm believer that over the long term, that gold is one of the most important assets to own because we are going to have eventually inflation again. And in fact, the inflation levels can be extremely high. Just look what's happening in Venezuela right now. Venezuela, I don't know how anybody is living in Venezuela. Their hyperinflation is out of control and nobody can afford to live. And the fact is that there's situations in the United States and other parts of the world where so much money has been printed that eventually, once they stop manipulating these markets, we could literally see markets like gold go to $4,000 or $5,000. I still believe that those type of moves are happening. But over the short term, I want my clients to be able to get into the markets at the right time, and I do believe that because of the reasons that I've given you for the last 10 minutes, that we are going to get an opportunity to buy gold and silver and oil and the Canadian dollar all at lower levels. And again, it's extremely important if we're going to make money that we buy at the right time. So again, if you're confused about what's going on, if you need further information, I'm here to help you 100%. You know, in the world today, nobody's making any money. Interest rates are at 0% basically. They'll pay you maybe 1% by keeping your money in the bank, which nobody wants to do. There's negative interest rates all over Europe, and that's turning out to be a disaster. There's so many problems happening out there, but in the meantime, my business doesn't deal necessarily in those markets. We deal in alternative assets. We don't trade stocks. We're not trading bonds. We're not doing those type of trades. We buy for the long term, and we're not traders. So basically, we want to hold our assets for the longer term, and I believe that there's some tremendous opportunities moving forward. In the meantime, when most people in the markets are not making any money, my clients are, because we've involved our clients in private investments. Again, we're in the alternative asset business. Assets that are outside of the banking system in the sense of trading stocks or bank stocks or anything to do with the stock markets. We're not trading bonds. We're not necessarily trading in currencies except in some of our investments. But my clients are making over 25% a year, and they're making it in U.S. dollars. And the fact is that the U.S. dollar is going to be the strongest currency. So why don't we take advantage of a blip in the market where we're able to take advantage of the rise in the Canadian dollar and a slight weakness in the U.S. dollar and take advantage of that, convert your Canadian dollars to American dollars at this point, and join us in this tremendous ride that we're taking. Our clients for the last 2 to 3 years have been killing the markets. We've been making 25% or more a year, and we're making it in U.S. dollars. So if you're not on board with us, you need to be. If you're sitting there saying, how am I ever going to retire with 1% that I'm getting in the bank and all these markets as crazy as they are, then give me a call and let me explain to you what the options are so you could start to make some money. Again, we're outside of the stock markets and bond markets. We're not trading in those markets. There's no money to be made in those markets at all. My clients are making big money right now, and we're making it in U.S. dollars. And the fact is now is the perfect time to commit and to convert Canadian to American, because we picked up a nice move in the Canadian dollar and a little bit down in the U.S., but that is not going to last. Now is the time to do so, and if you need help, give me a call. I'll explain exactly what we're doing and how my clients are making 25% a year or more when most people are not.
Connect with Harold, 1-800-432-1022. The call is free. It's confidential, what's discussed between you and Harold. 1-800-432-1022. RareColoredDiamonds.com is Harold's website. And Harold touched on Venezuela. Just a quick little story here. Venezuela doesn't have enough money to pay for its money. Venezuela's epic shortages are nothing new at this point. No diapers, condoms, car parts, aspirin. It's all been well documented. But now the country is at risk of running out of money itself. In a tale that highlights the chaos of unbridled inflation, Venezuela is scrambling to print new bills fast enough to keep up with the torrid pace of price increases. Unbelievable. Connect with Harold, 1-800-432-1022. Take a look at our featured diamond of the week from RareColoredDiamonds.com. It's a .44 carat oval cut, fancy, vivid, purplish pink argyle. We had a stunning heart-shaped last week. This week, an oval cut, another beauty. And almost a half a carat, .44 carat oval cut, fancy, vivid, purplish pink argyle. We'll talk more about diamonds in the second half of the show. You can see this diamond at RareColoredDiamonds.com. That's RareColoredDiamonds.com, featured diamond of the week. One of the things that we've been talking about on past shows is, how do you make money in the environment that we're in? North Americans, despise the stock market so much, they've dumped $2 trillion of stocks. Based on how Americans have been investing, it appears the average citizen really hates the stock market, according to Tom Lee of Fund Strat. He laid out his thesis in a note to clients on Friday. Households have not been buying equities generally since 2007. This is evident, and you can see this in our free weekly newsletter. There's a chart. There has been a substantial liquidation of equity ownership, most notably in direct ownership of stocks. Part of this effect may be that Americans have been burned by 2 serious drawdowns in the stock market since 2000. And I know Harold has said for a long time, stay out of the stock market. Yet at the same time, how do you make money today? Because, as we touched on past shows, if you're in a GIC at a bank here in Canada, and you use the rule of 72, if you get 1 or 2%, your money's going to double in 72 years or 30-some odd years. you're not going to be able to retire. In fact, coming out this week, lower neutral interest rates for pension funds is the new normal, according to the Bank of Canada's Pelose. The Bank of Canada Governor Stephen Pelose is recommending pension funds get ready for a new normal. Neutral interest rates lower than they were before the financial crisis. And he told a Wall Street audience Tuesday that the fate of neutral interest rates, he said, will prevail once the world economy recovers, and it really remains unknown how long they will last. But what he is coming out and saying is, during a question and answer period, that low interest rates are going to be here for a long, long time. And what does that mean if you're a millennial? One of those people around 30 and in that lower bracket. The end of golden era for investors spells trouble for millenniums. Turning 30 just got a lot scarier. A coming collapse in investment returns means that people that age today will have to work 7 years longer or save almost twice as much to end up with the same nest egg of those of roughly a generation ago. So says the research arm of McKinsey & Company in a new report that argues that investors of all ages need to resign themselves to diminished gains. The consulting company maintains that the last 30 years have been a golden era of exceptional inflated adjusted returns thanks to a confluence of factors that won't be repeated. That includes falling inflation and interest rates, swelling corporate profits, and expanding price-earning ratios in the stock market. And we touched on it on a past show. Larry Fink, who is the CEO of BlackRock, came out and said not enough attention has been paid to the low interest rates and now negative interest rates. And he gave an example, 35-year-old looking to generate $40,000, $48,000 per year in retirement income beginning at 65 would need to save $178,000 today in a 5% interest rate environment. In a 2% interest rate environment, that person would need $563,000 or 3.2 times. And the reason we bring this up, now is the time to speak with Harold Siegel about alternative assets. If you're sitting in a GIC at 1%, or you're like the majority of people really hating the stock market, maybe you don't want to go into the bond market. Real estate makes you a little queasy because here in Canada, there was a report that came out this week that most of the markets in Canada are at the upper end of their ratio, and it is stretched to say the least. So what do you do? Speak with Harold Siegel, 1-800-432-1022. He does have alternatives for you. 1-800-432-1022. Harold's website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. And we have a beautiful featured diamond this week. It's a 0.44 carat oval cut, fancy, vivid, purplish pink argyle. And we're going to talk more about diamonds. In fact, coming up in the next month, there's going to be a beautiful pink that's sold, a green diamond, and another blue. And we're going to talk about it as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping on April 29th, 2016. Our time is 9:10 in the morning Mountain. Our radio show runs 6:30 CHED in Edmonton, Sunday afternoon at 3. Also, shows archived and streaming 24/7 for your convenience. Harold's website's HESradio.com, rarecoloreddiamonds.com. We're on TuneIn. Also, YouTube. We have our own page. And you can't forget about the good old podcast. Through iTunes, type in The World Financial Report on Radio. You'll find us there. We're portable. We go on any of your devices. If you have never taken the time to speak with Harold Siegel, definitely do. Give him a call at 1-800-432-1022. Every time I speak with him, I'm always learning something new about investing and making money and where we are financially and geopolitically. 1-800-432-1022. It's always an education. rarecoloreddiamonds.com is Harold's website. Our featured diamond of the week is a 0.44 carat oval cut, fancy, vivid, purplish pink argyle. We had one of the nicest diamonds ever featured last week, which was a heart-shaped, and we have another stunning diamond, 0.44 carat, oval cut, fancy, vivid, purplish pink argyle. Speak with Harold about it. RareColoredDiamonds.com, 1-800-432-1022. We'll touch on this a little later after Harold's commentary, but green diamond up for auction. We have a blue diamond up for auction. We also have a pink diamond coming up for auction. There's a quote from Tobias Cormind, and we found it this week in a story from CNBC about colored diamonds and diamonds in general. And it goes along to what Harold has been saying for a long, long time. Colored diamonds, including yellow, red, pink, and blue ones, are so incredibly rare, you can compare them to rare paintings from the great masters. And that's why we say to you, when you go to Harold's website, RareColoredDiamonds.com, it's like going to a museum online. You're seeing the world's greatest diamonds, and they are so rare. In fact, Harold is one of the few diamond brokers dealers who has actually helped people invest in red diamonds, and that is rare. There are only approximately 100 certified red diamonds in the world. Harold has helped people invest in rare diamonds, red diamonds, on more than one occasion. Now, because of the rarity, the larger stones, the color, the growing demand among billionaires and the wealthy to find different asset classes which are unique and they're running out, this basically speaks of rare colored diamonds. Blue diamonds are very, very rare. There's a limited supply, and it's going to be even worse in the years to come. And we know that's the case with pink diamonds because the Argyle mine is shutting down in 2020. And he goes on to say in this quote, and with limited supply outstripping demand, interest in the diamond market, it continues to grow from wealthy investors moving in and investing. The equation looks really, really strong, very good in the years ahead for colored diamonds. And Harold, that's something you've touched on for a long time, the rarest of the rare, and people moving in because these diamonds were running out in a lot of cases. Limited supply. It's nature's art. And I know that you have helped quite a few people with red diamonds, and not many people have that opportunity.
Very, very true. Red diamonds are just the rarest of the rare. Very seldom do you ever see one come up for auction. I can't remember the last time I've seen a red diamond of any major consequence come up for auction. The red diamonds that we have seen come into the market lately have come because of the Argyle tender, because the Argyle mine in Western Australia produces not only the most beautiful pink diamonds in the world, but also produces some of the most beautiful reds. And there's very, very few red diamonds that ever become available for sale. So when one does, they sell basically for record prices. And again, there's hardly any red diamonds on the market at this point for sale. We've seen what has happened recently with blue diamonds because they've been in the news almost every single week. Blue diamonds have made the largest move of almost any asset class I have ever seen, and it's incomparable because it was only basically 12 years ago, in 2003, 2005, that there were auctions through Christie's and Sotheby's where vivid blue diamonds would sell for around $200,000 a carat. And $200,000 a carat at that point was a substantial amount of money for that particular diamond. But then people started to realize how rare these diamonds really were and how few of them were available. So when one would come up for auction, all of a sudden the prices started to change. They went from $200,000 directly to $1 million a carat. Then $2 million a carat seemed to be the norm for vivid blue diamonds, the larger ones. And the last 2 or 3 auctions, we've seen vivid blue diamonds sell for over $4 million a carat. So when you talk about a return on investment, back from 2005 to 2015-16, you've seen a market go from $200,000 a carat all the way up to $4 million a carat. And most people would sit back and say, well, it's just not possible, or how much higher could that market actually go? Well, you're going to see very soon, because the Oppenheimer Blue is going to become available for sale, and a good friend of mine who's a dealer in the industry plans on bidding the highest price he has ever paid for a diamond on that particular blue. So it would not surprise me to see vivid blue diamonds that size go for $5 to $6 million a carat. Same thing will happen eventually with green diamonds. Green diamonds have gone up substantially. Green diamonds we're just starting to bring to our clients now. Green diamonds are so rare that most people have never seen a green diamond ever in their lifetime. In fact, most people have never seen a blue or a red or a pink either. But the fact is that green diamonds only turn green because of uranium. And basically, these diamonds become so rare that one's coming out for sale that should sell in the $4 million per carat range. Now, these are the diamonds that we are starting to mine. We just mined a 7.5 carat vivid green rough diamond, one of the rarest diamonds ever found. These are the type of investments that I've been allowing my clients, my Canadian clients, to invest in with us, to be partners with us in these type of asset classes. So, again, there's no investments out there that are doing what the diamond market is doing at this point. And it's not me that's writing these articles. It's other people that are just looking at the market for the first time and realizing that this market actually exists. Now, we have diamonds that start in and around the $20,000 level for fancy yellow flawless diamonds. So most people that want to break into the market, this is an excellent way to do so. A yellow flawless diamond will increase by about 15% a year, and when you look at what you're getting on other investments, 15% a year is a tremendous return. And basically, they could go a lot higher than that because there's very few available. Now, when I say yellow flawless diamonds, I mean fancy yellow, fancy intense, or fancy vivid, the three highest saturated colors in colored diamonds. You don't want to just go onto a website and buy a yellow diamond, because if it has a flaw to it, the chances are is that it's a very common diamond. And the fact is that if it's just a 1 carat SI1 or SI2, that diamond's worth a few $1,000s. It's not an investment quality diamond. An investment quality diamond would really be the size of the diamond, which would be, in most cases, over a carat, but it doesn't have to be. There are some diamonds under a carat that are extremely valuable and make a lot of money on return. Then you want the color to be strong. You want a highly saturated color. So you want it to be fancy yellow, fancy intense yellow, or the heaviest saturated color of all, which is fancy vivid yellow. Those are the most expensive of all yellow diamonds. And then you want the clarity. So you want the clarity to be as good as possible. Internally flawless is the best that you can get, and that's what we offer to our clients. We will not offer a yellow diamond unless it's just for jewelry purposes, but we will not sell an investment quality yellow diamond that is not flawless. So you've got the carat weight over a carat. You've got the clarity, which is, in this case, perfect. It's internally flawless. You've got the color being fancy yellow, fancy intense yellow, or fancy vivid yellow. And again, those are the type of diamonds that you want to put away for your future or for your children's future. I don't buy stocks or bonds or anything for my grandchildren but diamonds. The only asset class I put away for my grandchildren, and I love them more than anything, are diamonds. And the reason I do that is that the youngsters now, and in the next 20 years, these assets will increase so substantially that when they do go to cash them in, they'll have a substantial start in life. But a stock can go down to zero, and I will never, ever, ever do that for my family. So, again, when it comes to investments, we're looking at yellow flawlesses start at about $20,000. They go up by about 15% a year. But get into the fancy vivid yellow flawlesses, and they can go up by 20 to 25% a year. In fact, they're very difficult to get at this point. The diamonds that we're recommending heaviest at this point are pink diamonds. The reason for that is that the 95% of them come from the Argyle mine in Western Australia. That mine is getting ready to close soon, in 4 years or less, and we feel that the price of pink diamonds will increase substantially. We're recommending pink diamonds from the Argyle mine as one of the best investments you can make. We have pink diamonds starting in and around the $30,000, $40,000 range and going up from there. Our private investments are in orange and green diamonds. And those diamonds are spectacular, extremely rare. Very seldom will you ever see one. And those are the type of diamonds that we're mining at this point, cutting and polishing and bringing back into the marketplace. And we're allowing our Canadian clients to invest with us. If that's something that you would like to do, we would love to have you involved with us. The minimum investment for that is $25,000. So again, Randy, what's happening in the diamond business is pretty well unprecedented. There's no other investment on earth at this point that gives the return that rare colored diamonds are doing, and with the safety. And when I look at an investment, that's the first thing that I look at, is protecting my equity, and second of all, making a profit. And diamonds, rare colored diamonds, will do that for you. They will actually give you the safety that you need because they never decline in value, so you have capital preservation. But then they go up in value substantially. We've got a very unique situation where a mine that produces 95% of the pink diamonds in the world is going to close. We feel the prices are going to increase substantially. We're suggesting at this point that that's probably the best investment that you could make at this particular point, is to invest over the longer term in pink diamonds from the Argyle mine, and also get into our private investments, which we're mining green and orange diamonds that we feel in the future are going to make our clients fortunes. So that's what I'm seeing in the diamond market today, Randy. And by the way, the featured diamond, that 44 oval, fancy, vivid purplish pink, we actually put into a magnificent ring, and we have a matching white diamond that matches that diamond exactly. So what you have is actually a 44 point, almost a half a carat, fancy, vivid, purplish pink Argyle diamond, one of the rarest diamonds that will come out of the Argyle mine. And then what we did, we put it into a magnificent ring setting and put a matching white, very high quality white diamond beside it. Anybody who sees that diamond basically is blown away how beautiful that diamond ring is. And when that ring goes to auction in about 5 to 10 years from now, I believe it's going to be a huge winner, and that's what I'm recommending as one of the best investments you could make at this time.
See it at rarecoloreddiamonds.com, featured diamond of the week, 0.44 carat oval cut, fancy, vivid, purplish pink Argyle, rarecoloreddiamonds.com, featured diamond of the week. And speak of pink diamonds, a large, vivid pink diamond expected to fetch millions at auction. A rare pear-shaped, vivid pink diamond will go under the hammer in Geneva in May, where auctioneers expected to get somewhere around $38 million. The unique pink, and obviously these diamonds can be renamed when someone invests in them, as we saw with the Josephine pink and blue diamonds. They were renamed for Josephine. The billionaire Lau picked them up for $77 million for his young daughter, renamed them after her, Josephine. Described by Sotheby's as a supremely rare and exceptional diamond weighing 15.38 carats, the GIA, the highest body for grading diamonds, have given the stone their highest possible grading, which is vivid pink, according to David Bennett. He's the worldwide chairman of Sotheby's International Jewelry Division. It's so strong, the color. That makes it a very rare stone indeed. In fact, it's the largest pear-shaped fancy vivid diamond ever to be offered at auction. This discovery of gem-quality pinks is rare, according to Sotheby's, which will auction this one off at the Magnificent Jewels and Noble Jewels sale in Geneva May 17th. The estimate, 28 to 38 million. Bennett said of pre-sale estimates during a preview of the diamond in London, England, there have been a couple of stones which have sold for around $2 million per carat, or a little more historically, so it seems to be perfectly correctly estimated. We will see. Earlier this month, we had that 10.10 carat oval internally flawless vivid blue cell for $31.8 million at Sotheby's in Hong Kong. And last week, we had the Shirley Temple blue diamond sold privately after the sale for $22 million. And Harold, one of the other stones, and you touched on this on the last show, it's a big blue, and it is an absolute beauty. It's the Oppenheimer Blue Diamond. Will fetch $45 million in auction, according to Christie's. It's the largest fancy vivid blue diamond ever to be offered at auction. Will form part of a dazzling jewelry sale in Geneva next month, where it is seen as possibly fetching $45 million. The rectangular cut Oppenheimer Blue, which is measured at 14.62 carats, will be a part of the magnificent jewels auction May 18. And that's what always happens. Last year in Geneva, you have Christie's go one day, Sotheby's the next day in May, and that's where the billionaire Lau picked up the pink diamond and blue diamond for his young daughter. So I would suspect he may be dipping into that market again. But we will wait and see to see if we can. And that was the blue diamond, they called it, and it was renamed the Josephine Blue, sold for $48.4 million. But we will see if the Oppenheimer Blue sells for $45 million. Harold, a very good sign if people are lining up already to place a bid, as your contact is. I would imagine there's going to be a lot of interest in this Oppenheimer Blue.
Oh, you bet, you bet. It's just so amazing to see what's happening to the price of diamonds. I'm extremely happy about it. Now, again, we haven't done an auction for a while because we've had to change our technology. So the people from Relentless Technologies from Vancouver are coming down to visit me in Florida. They'll be here on the 20th. They're actually showing us our new website and all the new technology. You'll now be able to attend all of our auctions and our seminars, our live auctions and seminars, virtually on your own iPhone. You'll be able to actually download our apps. You can do that now at the App Store, but you're going to be able to attend all of our functions, our famous auctions, our famous worldwide seminars, all on your iPhone, your iPad, and your personal computer. So technology has changed so much over the past 3 years that we found that our site was almost outdated that quickly. So it's taken a while to get it up to speed. We're getting our demonstration at the end of this month, and then after the summer, we intend on having several of the most exciting auctions. We'll be selling diamonds, we'll be selling jewelry, we'll be selling classic cars. We're going to have some of the most fun auctions you could ever attend. One of the auctions that we're planning is for husbands and wives, where we'll be selling classic cars and diamond rings. As the husband buys a car, the wife buys a ring, and everybody's happy. So we've got some great plans coming up. We feel that our auction business is the future of the diamond business. Nobody in the world has what we have, especially a state-of-the-art auction virtual business where people can attend our auctions on their own iPhones from China, Australia, Europe, or anywhere in the world. So, again, we're very excited about our immediate future. Again, we'll be holding several auctions at the end of, after the fall, and then that will be hopefully a monthly thing that we'll start to hold our auctions. But again, we've had to change our technology. I can't wait to see how the new websites are going to look, and again, that will be coming to us within the next month.
Featured diamond of the week is a .44 carat oval cut, fancy vivid, purplish pink Argyle. Argyle Mine shutting down in 2020. We know this as a fact. They have stated it now. Rio Tinto, 2020, and the mine shuts down. They may have a few diamonds in the vault left over for a few years, and then it is the secondary market that we go to for the world's most beautiful diamonds, those pinks. Invest in them now. RareColoredDiamonds.com, featured diamond of the week. Well, we talked about the unique pink from Sotheby's. So that's coming up in Geneva in May 17th. Now, May 18th, we have the Oppenheimer Blue, and that is through Christie's. Now, Christie's, as we take a tour of the world when it comes to auctions in the month of May, they're going to be offering what I consider to be my favorite color. I love all the colors of diamonds, but green is my favorite. Christie's to offer the largest ever fancy vivid green diamond. The largest ever fancy vivid green is the Aurora Green. A rare 5.03 carat stone is set to come up at the Magnificent Jewels Auction in Hong Kong May 31. So we have May 17, 18, and May 31. I can't wait for the auctions this month. The stone has VS2 clarity and no fluorescence, which is extremely rare for such a diamond and is in radiant cut. Now, Christie's has not officially released any information about the sale, but an insider has estimated that the diamond would be valued around 16 to 20 million, or 3.18 million to 3.98 million per carat. Green is a very desirable color in Asia, and it's possible, like previous auctions of colored diamonds, the highest bidder will come from there. Green diamonds very rarely come up for auction, and since 2003 only one Fancy Vivid Green has been sold. It was a 2.54 carat Fancy Vivid Green VS1 diamond at Sotheby's Magnificent Jewel Sale, November 2009. It sold for a record price of 1.22 million per carat, or 3.08 million in total price. And one of the things that Harold has been working on privately, and we haven't really talked about it a lot on the show, although Harold's starting to reveal more now, and that is Harold is really getting involved in these green diamonds. Harold, you brought us the pink diamond, you brought us the yellow diamond, and now you're bringing us the green diamond, and we can't wait for the end of the month to see how this diamond sells at auction, because the green diamonds could be the future of colored diamonds as we move forward.
You better believe it. I'm very, very excited about that. And again, we've been very fortunate to be able to get some outrageous green diamonds. And again, this vivid green that's coming up for auction is going to sell for probably $4 million a carat or more. So that just tells you what the future is of the diamond business. And don't forget, orange diamonds, which are equally as rare, are also the diamonds that we're mining. So we want our Canadian clients as partners with us. So again, if you want to learn more about this and the mining aspect of our business, give me a call. Again, we're making a lot of money in that part of the business, and we want our Canadian clients, who I know are suffering. There's no doubt that what's happening up in Canada with the low oil prices and layoffs and things like that, a lot of our friends are suffering, and we don't want to see that happen. That's why this offer is on the table. We want our Canadian clients to come out of this okay. So again, if you're not doing well in the markets, give me a call. My clients are doing much better than the norm. And again, we're very conservative here. We're not taking risks, but we are sharing the wealth and bringing our partners in as our clients as partners. So again, if you want to learn more about that, give us a call and we'll explain it to you.
As we touched on earlier in the show, get our free weekly newsletter from Harold. Connect with him, rarecoloreddiamonds.com, rarecoloreddiamonds.com, 1-800-432-1022. You can get it sent to you via email every week. You can go through it in 5 minutes or spend hours, but read that story about millennials, how difficult it's going to be moving forward, and the fact Stephen Pulose, the head of the Bank of Canada, coming out and saying interest rates are going to be remaining very low. How do you make money in the environment that we're in, especially based on people have soured so strongly on the stock market, as the story we had in the newsletter stated, $2 trillion pulled out of the stock market and people not moving in. Not a surprise, considering all the turmoil that we've gone through since the year 2000. And Charlie Munger said, we have a vast gambling culture, and people have made it to respectable. Basically, the stock market is a casino, and too many people want to get rich quickly. And Larry Fink pointing out that if you're a 35-year-old and you want to retire $48,000 per year in retirement at 65, you'd need $178,000 today at a 5% interest rate. But if interest rates are low, 2%, you're going to need about $563,000. And Harold, with about 30 seconds left, that's where you come in. People should be talking to you.
You better believe it. There's no way in the world you will retire making 1% return on your money. So give me a call. More than my pleasure to sit down and explain what we're doing. If it's good for you, we'd love to have you as a partner. So give us a call. Also on the Commitment of Traders report and everything like that, if you want to learn how to read them so you understand what's happening in the markets, give me a call and I'll go through it with you and send you the up-to-date Commitment of Traders report and explain how to read them.
Connect with Harold, 1-800-432-1022, rarecoloreddiamonds.com, rarecoloreddiamonds.com, 1-800-432-1022, featured diamond of the week, a .44 carat oval cut fancy vivid purplish pink argyle. See it at rarecoloreddiamonds.com, featured diamond of the week. And thank you very much, Harold Siegel, for another great show and your knowledge.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Take Harold up on his offer. It's a rare opportunity for you to speak with someone of Harold's knowledge when it comes to investing.